This is the Investor Connect podcast program. I'm HULT Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Interested in learning more about investing in startups, launching a new startup and need to raise funding? The Startup Funding Espresso is a daily podcast in a short, concise format delivered to your inbox every day, Monday through Friday. In the time it takes to drink an espresso, you can learn about startup funding. To subscribe, go to investorconnect.org and put your email into the pop-up box. Well, hello, this is HULT Martin with Investor Connect. Today we're here with Andreea Danila, founding general partner at Global Millennial Capital. Global Millennial Capital is the first venture capital investor from the Middle East to introduce artificial intelligence in the investment process. They invest in global, scalable, tech-enabled, and highly transformational, consumer-centric early-stage opportunities in Silicon Valley. Andreea, thank you for joining us.
Thanks so much, Martin. It's a great pleasure to be here today with you.
Great.
Thank you for the invitation.
Well, thank you for joining us. And let's kick off with your background. What did you do before investing in early stage companies?
Thank you, Martin. And I think as a general partner of an emerging fund, it was really critical for me before starting to get my hands dirty on investing. I spent more than a decade actually in private equity and venture capital, and I was fortunate enough to start my career in London with Porton Group, a fund that we were basically investing in early stage technologies, mainly R&D who had a clear view on commercialization. And this is where actually my first love to invest in startups began. And then I joined a $1 billion fund from the Middle East, and I became an emerging market specialist. And that gave me a very interesting perspective and a very broad view into early and growth, spin out, carve out, buy side, sell side. So seeing the entire investment cycle gave me a very, very good understanding on how to invest at early stage. And in late 2019, beginning 2020, I set up my first fund, which is the Global Millennial Capital Fund. We already completed 6 investments, and we are very, very confident by the end of the year we should be on track to deliver 15 highly diversified, highly growth ventures, predominantly in US and Silicon Valley. And we are completing a couple of them in Texas as well. Great. So what excites you right now? I think it's a super question, Martin. And I believe that, the COVID pandemic from our perspective has been a great stimulator towards creating a new dynamic in the market that previously was not available. And basically transition the traditional consumers into a very online space and completely accelerated the adoption of technologies. As a result, we have seen that companies in the tech space, across technology solutions, across innovations, have reported double-digit growth. And we have seen valuations attractive in the middle of the pandemic when we just launched our fund. And then, of course, we have seen a significant valuation delta. Our fund has already actually realized 90% growth in less than a year as a result of a very attractive entry point. From our perspective, when it comes to verticals and investing, we believe that innovation as an asset class is really important. We are very passionate about artificial intelligence, fintech, mobility, as well as other transformational sectors. But mainly because, we believe fintech has had a great run as a result of, the last probably 3 to 5 years. We have seen a large number of unicorns being created within the fintech space. We have seen large amounts of capital going into the fintech space. And we believe that artificial intelligence, blockchain, crypto are some of the hot trends that are coming to market within the VC space.
Great. Well, you see a lot of startups and work with a lot of investors. What's your advice for people investing in startups in your sector? What do you tell them to do before they write that check?
Sounds great. And I think for us as a fund, we bring more the institutional approach, or I would say as an emerging fund manager, the semi-institutional approach. The great thing about, a fund like us that, today we represent a large amount of high net worth individual who ideally they would have the passion for investing into startup. They would understand the investment cycle. However, they would probably lack the diversification, lack the support in administration and reporting. Our advice for retail and even professional investors is to look at investing in startups as really a portfolio investing. And while startups provide an excellent opportunity for return, we believe diversification is really, really important because some of the startups have a certain level of risk. As a result, we feel that the evolution in the fintech space has provided investors with options. So even retail investors today, especially based in US, but also in other emerging markets, can look at a wide variety of ways to hedge risk and invest in startups. There are robo-advisory, there are fintech apps, there are investment managers like us, there are angel groups with whom they can group and still look at a very, very attractive investment term. However, they have to remember that diversification and portfolio exposure remains risk to generating those risk-adjusted returns, and they have to factor an illiquid asset class, a 5 to 7 year lockup. So, of course, with all that said in mind, the startup environment is really attractive. US is a fantastic investment geography. It still generates one of the largest unicorn per capita ratio. And I think there's so many exciting things to look in the startup environment.
Great. And then on the other side of that table, what's your advice for people running startups? What do you tell them to do before they go out to raise that first round of funding?
I think it's a nice way of looking at both sides of the table. As an entrepreneur myself and as a founder myself, I feel that it's really critical how entrepreneurs will look at their strategic positioning. I think entrepreneurs have to be definitely very passionate about their business idea and the ambition to really be successful. It's an important criteria. However, I would also advise to them that they should analyze, plan, and basically execute on a very strategic business idea. Positioning as a competitive advantage over medium to long-term growth could be a really critical factor towards achieving those unicorn returns. As a result, I believe that innovation and the quality of innovation remains key. I would encourage entrepreneurs to try to develop highly qualitative and highly innovative ideas that could give them advantage over long term. The second advice I would have for entrepreneurs, I would say across sectors, would be the human capital element. And I think while it's challenging in the early stage of startup to attract the best-in-class talent until you prove yourself as an entrepreneur, I think it's really critical to surround yourself by very, very talented and basically passionate people about your idea at both management and board level, because those act as your multiplier of growth. And of course, there are a lot of other considerations to factors as you build and you grow your business structuring, business risk, legal structuring, all sorts of different business challenges and opportunities will come in front of a very skilled and a very passionate entrepreneur.
Great. Well, let's talk about the state of investing in startups. How do you see the industry evolving from here?
Sounds great. And I think that was definitely a topic that, was on our mind, on our investor mind. And I think, especially when we look at venture capital, in the vertical where we operate, we believe that the industry is transforming and we see financial services in general going through a very transformative point in time. And we believe the market structure as a result of the evolution of different technologies is really impacting the way people invest, but also the way we as fund managers create financial products. And that was definitely at the heart of the creation of the global millennial capital investment thesis. We wanted to bring to the market a product that retail and professional investors did not have access to. And of course, look at transforming the way the traditional and old school of investing was done. And that was really at the heart of what we do today with the introduction of our data analytics and machine learning model. Is basically we take a data-driven global perspective in investing. And that is very important for us to understand where the startups currently are clustered, what is a global benchmarking criteria looking like, and how we can translate those investment questions or investment criteria into program. Because as we all know, deep learning is definitely transforming and turbocharging various industries. And we believe that venture capital is also one of the industries that will be transformed. We are extremely excited to be at the forefront of the industry in terms of transformation and transformative investment solutions and approaches.
Great. Well, let's talk about your investment thesis. What exactly is it, and what is your criteria for looking at startups?
That sounds great, Martin. I thank you so much for all these valuable questions and very insightful conversation. As probably any other venture capitalist, we believe in the technology intersection for the online and offline business models. And we believe in the acceleration of the adoption of technologies globally, but also in emerging markets. We feel US taking global investor perspective or an investor that sits in Middle East, we believe US as an investment geography remains at the forefront of innovation in terms of unicorns per capita, but also shorter investment cycles as compared to anywhere else in the world. So US time to unicorn around 5 years on average as compared to the MENA region, where we spend almost 10 years waiting for a unicorn to emerge. But also, again, betting on key verticals that are transformed, including artificial intelligence, fintech, mobility, and consumer services. So from our perspective, we look at investment geography, the fundamentals of the investment geography to enable a fund like us that aims to be highly diversified to generate the best-in-class risk-adjusted returns. We then look at key trends and key verticals. We look at transformation. We look at sectors that will become attractive in the next 5-6 years, and we break down that data to understand how the evolution of that trend emerges. For example, today we see a massive trend coming into crypto, a massive trend coming to blockchain. We believe decentralized finance is really going to be the new rule of the book in financial services. And of course, all the other insights that come from our data crunching and data criteria. And lastly, I believe it's for us, we would call ourselves, a consumer tech focus. So you could say also a sector agnostic. We are quite generalist in the sector. But we again take the criteria approach, the clusterization approach. And for us, it's really critical to understand if the startups that we bet on have the features of a unicorn within that stage, within that investment cycle, within that cluster. So looking like unicorn features is really what we look for. And we believe that we can detect those features early on because we know out of 10,000 fintech companies, a company, like Envel, for example, that we invested in is definitely in the top quartile sort of cluster for us.
So what exactly is your criteria when you look at a startup? What do they have to pass in order to get through to an investment?
Sounds great. And I think it definitely, I would say, we break down our investment approach in terms of an intersection of a fintech player and a fund manager, mainly due to the fact that across our 3 traditional investment stages, I would say the investment origination and preliminary assessment is done purely utilizing data and code. And then the investment decision is basically done based on due diligence and final, I would say, or senior advice from myself based on the inputs on the team and some of our board members. But to go to the specifics of how we look at selecting startups, we definitely look at around 12 to 18 questions when evaluating and running a 360-degree assessment on a startup. what we call. We look at the quality of the innovation of the business model and the sub-vertical where that startup would be positioning itself, as well as we look at assessing the criteria or the success factor based on a formulation that is driven on the basis of entrepreneur background, entrepreneur's education, previous exits, quality of innovation, statistical indicators such as, of course, valuation, funding, number of investors, among others. So I would say it's really sort of a deep learning, what we would call a multiple criteria set. And, a lot of these startups, we pick them up through our QA. So, keywords is really key. And I believe keywords it's something that we are definitely improving our algorithm, but it's something that we can really detect, out of a large data set. So again, we are not taking a regional approach, submit your business plan approach. Actually, we don't need to receive business plans because we will look for you. We have the data on you. We have access to the data. And of course, if you're a startup that wants to raise capital, you tend to be, of course, publishing your data. But we hope that by September, we should be launching our app as well that will enable global entrepreneurs to submit their data if they want and get what we call a unique company success score. That can help them and looking at certain areas of their business and being able to improve in order for them to have a greater access to funding, a greater valuation, as well as understand how competitive and global benchmarking landscape will look at positioning themselves.
Well, great. And so you work with a lot of startups and investors. In the startups you work with, what is the main challenge you find they face?
I believe that there could be, of course, depending on the business model, there could be various challenges that entrepreneurs could face. I think for female entrepreneurs and minority entrepreneurs is definitely access to funding. So I think, as financial services, fintech, venture capital evolves, I think more non-biased capital will be allocated towards more minorities, which will increase the rate of success within those groups. But I think in the second perspective that I would take to challenges, and we'll talk more about opportunities as well that entrepreneurs have coming from different backgrounds as well, would be probably different structural and legal frameworks. Third would be, of course, competition. I think entrepreneurs with bold ideas have to consider competition. They have to move ahead. They have to be bold and they have to be focused 24/7 in achieving their goals. And I think in the technology space that's something that any entrepreneur has to have on their idea. It's how to take full advantage of their first mover position and how to scale up their business.
Great. And then on the investor side, what do you see as the main challenge investor faces today with startups?
Of course, some of our learnings in post-investment and having done, investments across the spectrum of stages, I would say. And one of the reasons also why we saw some of the challenges in post-investing was to create a fund that will not think traditionally as a lead investor. Because statistically, when we assess funds that don't make more than 20 investments, into each fund, they tend not to generate above 2 times cash on cash return. It's just because each general partner cannot have more than 5 to 6 board seats. And going back specifically to your question, I believe for us in investing, we feel that entrepreneurs, probably the main challenge is to keep the entrepreneur committed in delivering on his business plan, especially in the first 3 to 5 years of investing. And I think that commitment to the business plan, it's really what is driving, potential returns, because we are at the end of the day investing in people at the early stage where we invest in seed and Series A. And I think the commitment of the entrepreneurs to implement the business plan, even though there is a pivot, even though there is, of course, an evolution in the business plan, I think that's really critical to see entrepreneurs that are fully committed to deliver a company from a PowerPoint presentation until a potential unicorn or IPO.
Great. Well, you mentioned several applications and sectors in the interview today. If you had to pick one or two that you think are the best opportunities for investors to pursue, what would you call out as number one and number two?
From our perspective, we absolutely believe that blockchain, crypto, Bitcoin are the number one trend to watch. And I think something that currently we are evaluating in our portfolio to increase our exposure. We started in a more conservative or a more traditional way. But today we are very bullish on crypto, blockchain, and Bitcoin. And I think probably a second trend would be mobility. I think electric vehicles is again a trend that we are observing very closely, especially in US, at the center of innovation. And third, I believe fintech will continue to grow across different spaces. So that's again somewhere we continue exposing our portfolio to.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Maybe I could, ask a couple of views from your side in terms of how do you see investor appetite and, how do you see new fund managers gaining market share and any tips and suggestions you would have for me?
Sure. No, I think the market is very frothy right now. There's going to be many startups coming up. Funds are starting up at a great rate. I think this is the best time to be investing in the market. Stock market's all-time high, interest rates are zero. And so there's a tremendous new startup cycle starting because of COVID, and the whole new world has a whole new set of care about. So I think you're in a good spot here to pick up on the next phase of startup funding. And there's just a tremendous number. They're talking about breaking up big tech. That's going to create many, many white spaces on the board for filling in where that leaves the companies. So I think it's a tremendous time to be a fund manager. The biggest challenge I face as an investor is just the explosion of the number of companies that are out there and business models that are coming up as well. I think you're in a great spot there with the fund that you have and the track record that you have so far.
Sounds great, Martin. And it was really, really nice speaking to you today. I always listen to your shows and I follow you. I think you're doing a great work. We are all inspired by your work. And of course, if your audience wants to reach me, we are very active on LinkedIn at Global Millennial Capital. And, we look forward hearing, in case they have any questions or they want to reach out.
Great. Well, we'll put that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thanks so much, Martin. See you soon.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Unifymoney is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.